Hi, friends. Welcome into Sharing with Friends. On behalf of Sharing Down Syndrome Arizona, pull up a chair as we dive into this great conversation. We have another amazing guest, another dynamic guest with us, Steve Owens from Owens and Bondell. He's really going to have a conversation with us about taxes and wrapping up the year strong, in particular, charitable giving. What does that mean? How do you break down charitable giving and how it benefits all of us in the end? So, Steve, thank you so much for being with us.
Pleasure.
First off, let's talk a little bit about state credits versus charitable donations. There is a difference, right? What's the difference?
That's a great question. The state of Arizona offers a unique opportunity for taxpayers to reduce their state liability, their state tax liability dollar per dollar
Mm.
by doing a charitable credit contribution. And there are 5 different types of credits. There's a charitable organizational credit, there's public school, private school, foster care, and a military family relief fund credit. A donation is a little different. So those credits are dollar per dollar reductions in your state taxes. The donation gets put in your tax return as part of your itemized deductions. So if you give to a church or a charitable organization, it reduces your taxes by a percentage of that contribution if you itemize your deductions. So you have to go through a little bit of math to see if the donations will actually be worth it to you from a tax perspective. But the credits, you will always recoup those taxes, whether it's in the current year or depending on your situation, it might be in a future year, but you'll always receive a tax benefit.
And we were chatting a little while ago, and that really sets Arizona apart, right? Just those five different credits that if you live in Arizona, if you live in the state of Arizona, you have the option of having those five different credits. So that really kind of makes that situation special and unique for
Yeah, it's
Arizona
it's
families.
unique. It's a state program. Not a lot of states have that. In our firm, we've done tax returns for various states, and Arizona does offer
Yeah.
that uniqueness to taxpayers for sure.
Okay, so let's talk a little bit, kind of segue into donations and contributions. Of course, Sharing Down Syndrome Arizona is a terrific organization to consider when thinking of a charitable donation. So, how does giving to a nonprofit in particular benefit families, benefit individuals when it comes to taxes?
Well, yeah. So again, the 2 examples with sharing Down syndrome, for example, it qualifies as a charitable organization credit. So this year for a single or a head of household, I think it's $495. For a married couple, it's $987. So the state imposes those limits.
Mm.
That's the dollar per dollar reduction on the state tax return. Whereas a donation, and you can give more than that for sure, dollar amounts over that would then go into this donation category, which would be part of your personal itemized deductions if you qualify for that. And then those reduce so that $1,000 contribution to a donation what might save you $250 if you were in the 25% tax bracket, for
Mm.
example. So there's a difference between the donation and the credit. The credit has that upper limit. Donation doesn't necessarily have that big limit or that limit. There are some limits, but most people can donate usually whatever they want, but you only get a percentage savings of that donation,
Mm.
whereas the credit is 100% dollar per dollar.
Got it. Okay, now some people might have the conception or the idea that you only have until the end of the year
Right.
to make those types of charitable donations, but that's not true, of course, right? It's April 15th for.
Yeah. So great question. So the December 31st deadline is for the charitable donation side, the itemized deduction side. The state tax credit side, you do have till April 15th for all except the military family one, I
Mm,
believe. So
okay.
yeah, those other 4 you can give to those organizations all the way. You might not be sure what your tax liability is going to be. You could look and see. You do your taxes. Oh, I'm going to owe $500. Well, instead of owing the state $500, this is in March, let's say, of next year, you could say, well, let me give to this charitable, the Down syndrome organization, and I could then reduce my $500 dollar per dollar, and now I don't owe the state anything, and I've allocated that money to the organization I want to.
So it's a win-win.
Yeah.
It's a win-win for the taxpayer, and of course it's a win-win for the organization and the charity. In this case, Sharing Down Syndrome Arizona. So really, and you mentioned something earlier in our conversation that was really good. You said it really kind of depends on each each individual's personal tax situation,
Right.
that they needed to consider.
Yeah, there's some complexity to this. The tax law, unfortunately, it's funny how you introduce this as a casual. Everyone loves a casual tax conversation.
Yeah, just
It
another
becomes
casual
very
tax
it
conversation
becomes
around the dinner table.
very complicated very quickly. It's like, wait a minute. And the government, I think, in the
Yeah.
last decade has passed more tax laws than they had maybe the prior 20 or 30 years. So it seems to be getting more and more complicated. So every situation is a little unique. The higher standard deduction, the pass-through entity tax for business, all of these scenarios can impact the state tax credit and where to give and how much you can give and what benefit you receive. So really good, I think, to have discussions, and as your situation gets more complicated, you can certainly reach out to an advisor, a CPA firm, whatever, to try and see what might work best for you. For most people that are kind of in, okay, we have W-2 income and pretty straightforward, it's a relatively simple breakdown to say, oh yeah, this can work well for you. But occasionally it does get more complicated.
Occasionally.
Yeah.
You just never know,
Yeah, yeah.
right? So you touched on something, Steve, that we can have a further conversation about. So let's talk a little bit about tax laws then. Are there any tax laws in particular, say for 2025, even going into 2026, that families should be aware of that might, change their situation, or that they need to consider when pulling their taxes together?
Sure. Yeah, the on the state credits, those limits keep going up. Next year, they're even going to be higher. So I think that's good to pay attention to make sure that you're giving the right amount that you want to give, and that you're reaping those, maximizing those benefits. Yeah, tax laws in general, I know talking about the government right now is a little bit complicated because there's a lot going on, but things like the overtime rules, the tips rules have changed, and those should be noted on W-2s as they start to come out in the new year. Even interest on vehicle loans, even for an individual that doesn't have a business, that has changed. Even if you don't itemize your deductions, again, the itemized deductions, taxes to the state, mortgage interest, charitable and church donations. If you don't itemize and you take the standard deduction, for an individual, it's around $15,000. For a married couple, it's around $30,000. So when you look at those laws, one big thing is you can still donate and get a charitable donation of up to $2,000 for a married couple, even if you don't itemize your deduction. That's new this year. So there's, a lot of the bill that was passed over the summer did just extend and do a few things, what they would view as kind of cleaning up some stuff. But the reality is there was some key little small things here and there that I think will affect a lot of people. So certainly some stuff to look into and how it might affect your situation.
And it's so great too, because friends, as we were even talking about earlier, this is why you need a good, knowledgeable tax expert in your corner to really help you navigate, those tax questions, and like Steve mentioned, to really help you maximize your personal situation when it comes to taxes. So, Steve, and this is just off the cuff, but how can people get in touch with you, say if they don't have a tax expert, or maybe they're even looking to switch, they're looking to perhaps get somebody new? Are you local here in Arizona? How can people reach out to you?
Sure, yeah. We've been around since 1981. Our dad started our firm out of his bedroom.
I love that.
So that's kind of fun.
Yeah.
And here we are all these years later, but we have 4 partners, about 25 employees. We primarily work with small businesses, self-employed in the healthcare industry, but we do tax returns, tax planning, and tax advice for a variety of other individuals. So we're on 16th Street in Missouri, Owens and Bondell, CPA firm, obcpas.com is our website, obcpas.com. And yeah, happy to be a resource.
Okay. Owens and Bondell since 1981. I love that. I was
Yeah.
1 year old, but I'm not going to give my age. I just gave my age. So, let's dive back into a little bit of more conversation with charitable giving. So you touched a little bit earlier on if you're a business owner. So do you have any smart tips or best advice for business owners who are looking to really maximize those, whether it's tax credits or from a charitable standpoint?
Yeah, so there's a few things. One is this: the charitable donation to Sharing Down Syndrome is a personal. That would be a personal thing.
Mm-hmm.
So, but the state tax liability gets reduced dollar per dollar, as we said earlier. There's another thing on the business side. If you have an S corporation or partnership, what's called a flow-through entity or a pass-through entity, is that the state of Arizona has what's called a pass-through entity tax credit.
Okay.
So you might elect, depending on your scenario, to pay your taxes through your entity, your partnership or corporation. And then that tax credit flows through to your personal return, because there's no state liability on the entity unless you make this election. And then when you pay it there, you get a credit on your personal return. So that credit could potentially affect the amount of credit that you get on the personal side with the organizational credit that you might receive. So yes, it can get complicated. There are other credits, such as there's a larger private school donation credit through a corporation or a partnership. There's also opportunities if we're going to donate to an organization and maybe they have an event and our business name is mentioned in the event on a t-shirt, a banner, whatever. Maybe there's a level of marketing that can be worked out that way. So yes, it does intertwine, especially a small business owner.
Yeah.
I'm a small business owner set up as an S corporation, which is very common. How do I maximize these benefits? There's certainly a lot to choose from and think about.
Yeah, certainly a lot of options for business owners, small business owners, and even if you're self-employed to consider. So Steve, what are your final tips, best advice, recommendations for final year-end planning when it comes to taxes and even on the charitable giving side?
It's a great question. Again, I think it's worth everybody thinking about it at least. I know talking taxes, talking money, not everyone's forte or what they want to spend their time doing. But I think a little bit of planning goes a long way. I think a key thing for this particular scenario is these 5 credits I mentioned at the beginning: the military fund, public school, private school, charitable organization, foster care. You can donate to all 5. So and again, there's dollar amounts, so you need to check, and the Arizona Department of Revenue website has those. And if you Google those charitable donations, you'll be able to see those limits very quickly. And again, for most of those, you have till April 15th. So if you have enough tax liability, taxes that you're going to need to pay to the state, it's just a simple choice. Do I want to pay the state, or do I want to put my money into these organizations? And, I can tell, just being here with this group for a few minutes today, that there's a lot of heart and a lot of love that goes into what they do. And I think most charitable organizations, as you look at where you want to donate, and yes, there's a tax benefit for sure, but where that money goes, what it's going towards, how it's going to help these folks as they have needs, it's well worth it. I think that, so not to get beyond just the numbers, but I think that's part of this consideration too, is that, hey, the state is offering this, give it to us and we'll do something with it. Who knows? or give it to this group who loves, cares for, thinks about, wakes up every morning thinking about what their mission is, and they can then take that money and utilize it for
Yeah.
what it's really meant for, and and make a big difference.
Yeah, I love that you said that because, first of all, let's back up just for a few seconds. I love that you kind of expanded on that if I'm an individual, I can make, contributions
Yeah,
to several different to those different credits,
right.
and it's still beneficial. But of course, then what you said, sharing Down Syndrome Arizona, of course, we're a very special organization, and we give so much love and so much heart to those with Down syndrome. And I know, Steve, that you actually have a personal connection and a
Sure.
personal story to some amazing individuals with Down syndrome. Would you mind sharing that with us?
Yeah, no, we frequently visit with a great friend by where we live, and get to go to the movies. He's
Mm.
introduced me to the new genre of Marvel movies and action, and we love it. We laugh and we clap during the theater. I think more people should laugh and clap during movies. I mean, that just makes it more exciting. And
That's awesome.
uh, he loves pop. No, he doesn't. He loves Reese's and root beer. And so every time there's Reese's and root beer at the movies, of course, I'm a Red Vines and Sprite guy, but whatever. We have fun.
Yeah, and his name was Justin,
Justin,
right?
yeah,
How old is
yeah.
Justin?
I love Justin. He's an adult. Yeah,
Okay,
yeah,
okay,
yeah.
that's awesome.
Yep.
Steve, I just want to say thank you so much for your expertise and your time and just your heart that you brought into this conversation. Thanks for joining us, and thank you for everything you shared. We did talk about, people can get in touch with you online or via, of course, via phone. We're going to go ahead and put all of Steve's contact information in the description of the video. Any final thoughts, Steve, before we wrap up and say goodbye?
No, thanks for helping out with such an important part of society, part of life, and the love and care that you give. It's a great organization. So thank you.
Awesome.
Thanks for having
Thank
me.
you. And thank you, friends, for joining us for another episode of Sharing with Friends on behalf of Sharing Down Syndrome Arizona. We really hope that we equipped you and gave you some really great pieces of information and knowledge to prepare you for year-end tax season and everything that comes with that. Make sure to like and subscribe, and we will see you on the next episode of Sharing with Friends.
Thank you.